Okay, good. So the what we are going to discuss, this is a 2 hour session, uh, 1 hour on area of confluence, and that is the first topic, and the second one is on patterns. So I will elaborate just on what is the basic concept we are trying to do. We have so far talked about confluence in the our understanding is confluence in terms of confluence with the indicators. So what we are going to talk is about is a different uh, concept of confluence, which is called the area confluence. As you see, confluence normally we talk about confluence of rivers and you know this is different structures joining and sharing a common node, right? So we talk about the reverse confluencing and all that. You already know, but basically, so this is a where the common intersection is the confluence here. Now, what is the advantage of this area confluence is that it is the the concept of probability. That means when there is a confluence, that is where the action is. That or many people are coming together, so that will at that point the probability of certain event happening is more. All right, that is how it is. So what we are going to discuss today, mostly one area is the support and resistance, and what really it means, which Mr. Ganesh is going to talk about in detail, and he will talk about in terms of even though we normally use support and resistance level, what makes a particular level more important or give certain weightage where your conviction on that decision making, depending on that point of confluence, gives you a better probability. So the probability of winning the trade is much better when your probability of the data on which you are making decisions becomes better. So that is the first part. In the second part, when we talk about the confluence also, there are 5 areas which I will go to. This is about the crossing. Okay. Now, in our terminology in trading, how we interpret this is the confluence can be, for example, people do trade on, let us say, support and resistance levels. Some people trade on chart patterns, right? Or candlestick patterns. Some use trend lines to trade. Some use strategies based on moving averages, right? Some can use strategies based on channels like Bollinger Band or VWAP Band or a Super Trend Band and things like that. So on these channels. So the idea is that when different people using different strategies think that at a particular point the index is overpriced and then it is where it cannot sustain more, so then they think that it is a good time to take profit or good time to exit. So it is that point at level or where many different strategies, whichever strategy you're using, all are coming together and thinking, and so there is a lot of activity. Okay, there is a selling pressure. Or similarly, when you go to a buying area, buying zone, demand zone, a demand is created where different people trading on different concepts come together. So that is where it becomes very strong. So that is the concept we are going to use. That when you are with the other people, for the institutional traders or other structures, then the probability of your decision will be much better. So the idea is here how to find those areas using the tools available, using chart. We are mainly using price action strategies. So using a price action chart and using those tools, how to zero in on this probability of get to this. Okay. So now coming to that, there is this chart which is just showing an example of this is a four concepts or trading strategies based on trend lines. Then you can see the horizontal line, that is the support and resistance level. Then you're also seeing this here, this channel, resistance using the channel, the convergence. And also, I think there is a moving average. No, it is not there. So here, in these only 3 points converge. So this support, and I'm not going to go to detail into that. So how it becomes strong, that is what Ganesh would explain to you. So there can be more confluence. I've taken a practical example. Sorry, please mute yourself. Thank you. So this particular chart is a daily chart on Thursday. So when I was preparing this presentation on Thursday night, I just drew this. Unfortunately, I can't give a link because by mistake I deleted that in the trading view. But this is the snapshot. Fortunately, I had this snapshot. So, for example, here, this is one scenario where the channel is a regression channel. We have a chart on regression channels already. And the second here is that it is at that point, I think, 2 o'clock, 4:20 into 2:20, around that time. So this is a regression channel. This is a trend line. This is a moving average, 13-day moving average, 13-period moving average. Then you have the, what else you have? Yeah, you have the support and resistance level. This is a Camarilla chart, support and resistance. That is what is in the background. So what you see is 1, 2, 3, 4. So this is the point. Actually, there is a small error in the chart because I moved the chart. So that would be a point of entry when you get it, where the probability that, because most people are thinking that this point is the important particular spot at which a trade can be taken, so that would work well. So I leave it here. So basically we are, okay, and then the second, okay, so another thing on the second part of the presentation, which Nilesh is going to present. Okay, what is missing here? The missing here is that the candlestick pattern here, right? So unfortunately, at this point, I didn't find a bullish pattern, candlestick pattern appearing. So that's why it is not included. So that is missing here. However, when you see such thing, we are used to that, which Nilesh is going to explain. So the fifth one will be what is missing in the chart will be the candlestick pattern of at that point in time. So how you can relate and how you can get reconfirmations. So basically, when what we are saying, like we used to do for the indicators, now what we are saying for the decision-making areas for taking entries and exit, we can use this idea of area confluence. So apart from resistance support levels and channels and all that, but this chart and candlestick pattern also will assist you to get to that confluence area. So anyway, which candlestick pattern will work and what time frame or how effective they are individually, I do not have the statistics, neither I could backtest it. So this is based on the generally accepted idea that these patterns work mostly depending on the market and how you use it. And Nilesh will elaborate on that. So now I close this my introduction here. I would invite Ganesh first to introduce himself and then start his presentation. Thank you. Ganesh, you can start your screen.
Okay. I hope I'm audible.
You are very audible, no problem.
Okay. Hi everyone. Good evening. So myself Ganesh Shinde. I've been in the market from after COVID, so last 3 years. And before we continue any further, I would like to just thanks Jagan sir for giving us this opportunity to be together and continuously and collaboratively learn from each other. So let's dive in. I'm just sharing my screen. Just let me know if my screen is visible or not. Is my screen visible? Please, anyone can confirm with yes or
Yes,
no.
Ganesh, it's visible.
Okay, great. So to start with, so my topic would be covering, I will be covering area of confluence in next 1 hour. So let me know if you have any question there and then only, or if you want to take it later on, that is also good. So area of confluence, we will be covering the following topics: why we need area of confluence and what is the definition, then demand and supply zone trend, value area volume profile, again dynamic and static support and resistance, and then we'll be covering the tools available for above analysis in trading. So this all will be just showing in on the chart how to make sure that we actually identify area of confluence. So first of all, what is area of confluence and why do we actually need it? So for a better execution, we need to have a better decision making capacity. So you don't have 15 minutes or 1 hour to actually get into intraday trade. You have just have 15-20 seconds and you have to take that decision within to go in or not to go in, with go for long to go for short. And this can only happen with you have a perfect data points. And these data points are actually nothing but support and resistance. To avoid any kind of a trade which can go against you, it is all about the probability. So to make sure the probability is realistic feasibility and on your side, you need to have a perfect support and resistance to make sure you have that winning trade with yourself. So what do you mean by area of confluence? So as Jagan sir said, intersection of two or more key level or areas of value. So it can be any indicator, trend line, moving averages, or horizontal levels. So nothing fixed definition like yes, you need this particular indicator with this one XYZ ABC, then only it can be identified. No, it has to be more than two or three to just justify that yes, there are multiple buying and selling point. Commonly, these things, these places of area of confluence are known as support and resistance zone. They are also known as demand and supply zone, and in some cases, initiative and responsive participants. So moving to the next. So this is just an example. This chart actually covers from 1st of July till present structure. 7th of July, the market was totally downward and then it starts moving up. So I just put in. So here I have used a parallel channel and there is a Fibonacci pivot points and also a moving average. And these are the horizontal lines. This is actually a reference point drawn considering the previous historical values. So the basic aim to drawing things about this is go for a higher time frame and always look left, because looking at left you get to see what was done in the past by major buyers and sellers. So based on that you're actually able to pick some of the significant points which can act as a good support and resistance. So if we could compare over all of these points, you could see over here the circles, the first one which I'm talking, it has actual confluence of this channel and also a moving average support. Similarly over here, so the below one is 200, the above is 50 MA, and this one is over here. It actually marks the resistance zone from this past and also Fibonacci pivot point. So any question in like identifying how to means get a view of which is the area of confluence?
What is the chart duration? Is it 5 minutes or 15 minutes?
1 minute, 1 hour, 1 hour chart.
Okay.
It is not justifiable like you have to go with particular time frame. You can make this particular combination in any chart. You don't have to just go into there like with a fixed mindset it is applicable of 15 minutes, 30 minutes, or 1 hour. Nothing like that. You can go with 45 minutes time frame and still it can be give a similar view. But if you are trading in a 15 minute, I would prefer you to create a structure, identify area of confluence on higher time frame, 1 hour, and then you will get to know how it is getting played at 15 minutes. That would be very much better way to do it for a good understanding of support and resistance.
Excellent. Thank you.
Any other question? Okay, so moving to the next part, dynamic and static support and resistance. So now we have identified support and resistance. We will now just compare it between the two parts. So today we are just going to look into the major intraday points where pivot points and all the related allied indicators which are acted like pivot points. So that is the major focus for today. There will be other indicators there also. We are not, that is not to the part of the scope of today's topic. So in static we'll be covering pivot point basically. So when we say static, it actually means it is based on the previous day's value. So today's day value does not come into picture. So if you're drawing a moving average, it is based on daily time frame. And when we say, so it is actually based on the yesterday's moving average, past few days, like 9-day moving average. In case of dynamic, what happens? It actually does not focuses on the previous day, but it actually takes into consideration what is happening in today's scenario. So what are the today's values? Like in case of volume profile or developing pivot points, they are actually considering what is the current close price, current high for the day, or current low. In case of volume, it is also considering today's volume with respect to the volume of the past. So this is the primary difference between dynamic and static support and resistance. So moving average, that is like already covered and it is fairly simple. So we are not taking that up now. So in case of pivots, we'll first look into this. Basically, these are the pivots: Camarilla, traditional, classic, Fibonacci, Woody, and Demark. Camarilla, Fibonacci, Demark are commonly used in today's time, and we'll be also looking someone who has built more on this one, Frank Ochava. So that will be also consider today. So first we'll look into this in the chart. So this is 1 hour chart of Nifty. If you have any particular, like we need to consider the bank Nifty only, we can do that
Uh,
also. Just let me know.
Manish, are you
Yes.
showing your trading view? It's not visible.
Not visible?
Yeah, your trading view is not visible.
Okay, thanks. Just a second. Okay, let me know if it is visible.
Yeah,
I am
visible.
sharing the Nifty 1 hour chart. Okay, great. So this is actually a default indicator. It consists of
Excuse me, sorry. Just please make sure that you unmute. Wilson, I see you not muting yourself. Please, we don't want background noise, but then recording and release becomes difficult. Thank you.
Okay. So this
Go ahead,
indicator
sir.
is like, yes. Someone said something.
Oh, I said you can proceed.
Okay, so this is a default indicator provided by TradingView. Pivot point standard is the name. So I've selected that. I have not done anything until now. So first we'll cover the what are the settings available in this, and then we'll proceed to the chart. So different types, the one which are showed in the chart, all these are different types of within this Fibonacci. The basic purpose or the basic difference between them is the source. If it is using high low close or it is using open high low close, just high and low, and the different ways to calculate them. So based on that, that is the why there is multiple indicators. So everybody's convenience are different, so you can go with your preference. I basically prefer Camarilla on Nifty. This is a pivot time frame. I would suggest you to just keep it as auto. If you want, you can change it, but if you change the time frame in the chart, this will automatically take care by itself. Number of pivots back, it just wants to know how many historical values you want to say. To avoid the clutter, we'll just keep it as a 3. Last 3 days. Show labels, it means the labels which is like the R1, R4 and the particular individual price. So you'll see the difference. R1, R2, R3. Price.
Once again. Again, I have to ask Arvind Ilangovan and Wilson to mute yourself. If you cannot mute, I have to remove you from this because there's a lot of background noise, disturbance. Also, Pavan. Okay, Pavan is muted. See, it is a compulsory to mute yourself when otherwise the background noise is still coming, the baby voice and other things. Please, Arvind, you have to unmute. Sorry, you have to mute. Okay, I think I have to remove you from this.
Okay, is
But
this Zoom
you
with?
can't go on like this. One second. Let's solve
Yeah,
this,
yeah.
this
Sure,
issue.
sure.
Arvind, can you please? Okay, thank you. And yes, one second. Is he gone somewhere? Okay, well, one moment. Let me remove these people who have not muted. Just a second, please. Sorry about this. Now, Srinivas, can you find out who is, where this noise is coming from?
Sir, all are muted, sir. I think it's from.
It's from Ganesh's
No.
background.
Yeah, Ganesh background.
Ganesh,
Okay,
your
let-
background?
Just a second, I will check once from my side.
No, Arvind Ilangovan is not muted.
He is muted, sir. It shows he is muted.
Muted now. Okay. Okay. Ganesh,
Okay, is it good?
you can proceed. Yeah.
Is it good now?
Yeah, it's perfect.
Okay, so let's continue then. Okay, so I have just created a visibility for only for 3 days, and the chart frame is 1 hour. So this I have kept it Cambrilla for my preference. You can go with any other. I will just show you the difference. It will not be much. Just few points here and there will get created. So this is Fibonacci I have selected, and you can see the difference. There was some line over here somewhere. It can change over here. This line was over here, but it is still not changed. And I will come back to Cambrilla. So the basic logic behind this is it is used by majority of the people and large traders. So therefore their preference in Nifty, Cambrilla is commonly used. So I'm also using the same, and if you could see, it justifies the usage because here you can see it has taken the support at S1, resistance at R4. Similarly over here, this is the S1. Again over here, R4. Once it has broken over the R4, it is consolidating over S5. So there are two things into this. There is one pivot point which will not be visible, but I will be showing one indicator in the end which will be actually telling you more difference what is actually pivot points and what is means CPR points, central pivot range points, and the support resistance points. So then that will create that will remove all the confusion. Over here, because of this clutterance, it is not commonly used by many because, and you can do one thing over here. You can remove this R1 S1 because they tend to actually overlap, and R3 and R4 R5. These are the very commonly pivot resistance and support points used. Once it breaks R3, the probability of hitting R4 is quite high. Similarly for R4, but that chances are very less. If its market is really trending, it tends to do that. But R3 and R4 justification is very common. If you see anywhere where like S3 is getting breached or R3 is getting breached, the success rate of reaching R4 or S4 is pretty good, above 70% from my experience. So going back to the chart, any question in this part for trading view, particular indicator which we are covering? If you want to go into the particular aspect of which what is the formula and everything, I have added a link in the appendix. You can go through that. The links provide the details about which particular indicator, how they are calculated, how individual support and resistance are also calculated. Also, the code is open source in this one, so you can also directly just go into the code to see how they are calculated for research purpose also. Okay.
Ganesh, one question
Yes.
regarding this Camarilla pivots, right? So, does the pivot have any significance? You showed support and resistance. So, like this, we have a P line, right? I mean, the pivot line. Does it have any significance? Which is significant? Is it significant than the support and resistance lines?
Yes, it has more significance. It actually depicts how the past day was getting created. If you could see over here, the pivot, this is pivot line. Just a second. So these are the pivot lines. Here you are seeing pivot lines are actually increasing. So that actually depicts market is going up. If I make it 15, very commonly it is used for next analysis. If I tell you directly, they are directly used for how the next day is going to look. If they are overlapping nature, so here you are seeing, because this is just one line, if you compare the whole CPR range, you will get a view when the market is sideways and when it will be in a higher value range or when it is lower value range. So that will be covering in the one of the slide. So that time you will able to get a view of this. But yes, it holds a very significant calculation for next analysis, because you cannot predict how the market will go, but you can definitely get a view of how the market will have a view for next day. So for that, the pivot points are used for that. I'll be covering that in one of the slides.
Thanks.
Okay, so next one is Fibonacci and AVWAP. So in this Fibonacci and AVWAP, we are going to first see into a manual method. There was an indicator, means there were no indicators available beforehand in trading for drawing this particular Fibonacci. So first we'll go into the manual method. So there are multiple ways to do it. I'm following a convention which is known as DMARCS method to calculate. Because this is a recorded session, you actually don't need to note it down the whole thing. So this is a 1 hour chart of Nifty. I have not changed anything. I have removed everything, drawings and indicators, so there is none available. So just a blank chart. First of all, you need to find what is the today's point over here. Then you need to identify the high point, nearest high point. So that will be over this point. So just draw a horizontal line. If you are having confusion, should I take a close price? There is a high price going, there is a low price happening. Just make it simple. Select a horizontal line. Your horizontal line is getting intersected. Just draw a vertical line. Okay. So this first stage, that is more commonly called as enclosing the field to create the Fibonacci chart. Next step, just take the low point and draw a horizontal line. So you have actually done the first part, which is the enclosing of the field. So this is our point. What we did, we just identified the high point. We selected, we have drawn a horizontal line over here where it is intersecting the market price. Next step, just drawing a horizontal line for the lowest point of the chart. So that we have done. Next point, identify from where this is getting closer. So this is our point, this distance and this distance. So it is closest to this point. So we'll be drawing a Fibonacci from the low point. Select the Fibonacci retracement. So it is the Third option, open it up. The first option, I have selected it because that is the one I am commonly using. So it was default selected for me. So to create a Fibonacci, you need to select 2 points. So for that, we have used the high point and the low point. So this is the second step of this, drawing the chart. We'll be going into the settings part later, but first we'll go into the drawing part. So the next part is the validity of the Fibonacci. So if you could see this particular diagonal, I hope it's visible. There is a one diagonal point line drawing from over till here. So you just need to make sure that this particular diagonal point so this particular diagonal line should, the price point should be touching it from below to the diagonal. So this is our validity period for this particular Fibonacci points. Any question in this part? So we have just drawn the Fibonacci. So if you want, I can repeat it.
One question from me, Ganesh, actually, just to clarify, you do you draw it from down to up or up to down, or it should be done differently depending on the spot where you're drawing or that candle what you have selected?
Yes, it would depend upon where this point is. So if you are drawing it somewhere around here, if this is our reference point and the box is this one, if you are getting calculated, so in this case it is closer to the below line. So that's why I would be drawing it from above. But in our current scenario, this was closer to the top point. That's why we are drawing it from below. So it actually gets.
Anybody want him to draw it again, or is it clear? Because
So Mahesh has asked him to draw it again.
yeah.
Okay, great.
First, you need to show where in the drawing rail those two things, and then the starting point, and then also if you want to do it from a previous day on a longer time frame, can you use a longer time frame and show it also? Maybe that's what you can do. You can choose a different time frame and show it.
Okay. Yeah, that can be done. So we'll select something like 1 hour, 30 minutes, or do you want daily? We can do daily also. So this is our chart. We are just going to make it line chart to avoid any confusion. If we have to consider wick, or we don't need to consider the wick. Just that is the only reason. So this is simple. You have to just change the chart layout. Now, what is your current point? Just mark it. Then identify the nearest high point. That is over here, right? First step is about identifying the enclosing field. So we have drawn our horizontal line from the nearest top point. Next step, identify where the horizontal line is getting intersected with our price chart. Draw a vertical line. Third step, identifying the low point. This would be our low point. If you are having trouble selecting a particular point or any particular place, there is one option called as magnet. What it does, here I am selecting horizontal line. It just goes itself and selects the top point. If I'm moving it, if you could see, the cursor is itself moving. So that is it becomes easier. So no need to just put too much effort. in
Can you say
identifying
it
the
again,
point.
Ganesh? I just missed it. Sorry.
I was saying, so there are many people who tend to get confused, like if there are multiple points, which point to get select. So that is why there is this magnet feature available. Magnet mode is on. Here it is coming in below. So I selected the magnet. I'm deleting this line. So when I'm selecting horizontal, just I need to go over here. Itself, it will take care of it. So drawing a line becomes easier, or identifying a point becomes easier because of the feature. So you can keep it on. So this is our step one, identifying the enclosing field to create our field. Next step, select the indicator and identify from where we need to draw. So this is our point and we have two lines. So from the visibility, we can see that this is closer to the top point and not the bottom. So we need to draw it from the bottom to the top. And the next step would be to make sure this price point is touching the diagonal from below. So this is the final Fibonacci.
It is
If you want,
respecting the levels, I can see. Yeah, of course.
yes.
So, but then you have extended for the whole day, is it? Or again, you draw another at another point? What is the
No,
rule for the extension? How far you can extend?
this is valid till up till here. If the price crosses this particular time, like 5th of December, sorry, 2nd of December, you need to create a new one.
Ganesh, one question, even in chat they've asked. So, what is the purpose of this diagonal? Why should the price be below the diagonal?
To identify the validity of the situation. So if the price is crossing this above horizontal line, this one or this particular area, we need to create a new point. You cannot just justify that yes, price is somewhere over here and you are following this fib, right? If your price is actually crossing above this, why it becomes not relevant for you? Okay, if price is going up and then still coming down, it becomes relevant. But price has once crossed this particular area over here or over here, how can you justify it? Suppose the price is getting diagonal over here, you cannot still remain with this particular levels. These levels are actually identified based on this diagonal. So that is the significance of making sure the price is touching it from below the diagonal.
Sorry, I didn't get that. Yeah, see,
Can you,
from
okay, sorry,
Okay.
no. I just will say something. Sorry to interrupt.
Okay.
Can you please talk about these percentages on the left? Fibonacci levels.
Okay, so Fibonacci levels are actually based on the ratios. So we'll go into the settings part. So here you can see there are multiple levels. I'm not kept on for all of them tick box. So this is how it looks like. Very commonly, all of these are not used, but they have to create a feature of it. So yes, they have to provide all of it. We mostly commonly used.
Can you draw the 50% line thicker
Yeah,
or something shows?
Ganesh, one question from Mahesh. He's asking what is the relevance of the diagonal used in Fibonacci?
Okay, so this particular diagonal will tell us till how much period these particular Fibonacci levels are relevant. If your price is touching this particular diagonal from below, you will get a reference point, this point. So this is the relevance of it. If your price is between these two high and low, this particular Fibonacci levels will be get justified, or price will follow these levels. So that is the relevance of this diagonal line. If you can just tell, if the diagonal is not there, I will draw it over here. someone will draw it over here, or someone will take it here. So if you take it over here, does it mean that this particular price will follow 15th of May up till there? So
No,
we need
as
to have,
long as, yeah, I mean, basically we draw fibs between swing highs and lows, right? So as long it is there in between the swing high and low, it is still relevant, right?
yes, but up to this point.
Yeah, maybe, yeah. I mean, okay, I didn't get why it is there till that point. Maybe I'll catch up with you separately. Ganesh.
Okay. So then, okay, we'll take it laterly in the group.
Actually, I have one doubt, Ganesh.
Yes.
Okay, you clearly explained about the validity of this particular Fibonacci. But what happens if new higher high or lower low form? Then we need to redraw it, or how to manage it?
Higher high means you're talking about above this high, you're saying?
Yes, yes. If the price goes beyond that particular level or goes below the zero, or what you can say 100% retracement. Yeah, below
Below this,
that or
it is
above?
totally, below this, it's totally fine. If it is above this, you actually need to change it.
But why it is like
This is a
so? Not
retracement.
only
We
one
are,
direction.
yes, that's what I'm coming to actually.
Okay.
If you could see, this is the trend going downward, right? So when we say retracement, what is happening? Price is going to retrace and it is still continue to maintain its trend. That is what retracement says. So it is supposed to go down. That's why price, if crosses below this, it is what it's supposed to do. But if it is
Okay.
going above this, it is actually saying that the trend is getting broken. So this particular Fibonacci, you have to draw again. The indicator name or the concept name Fibonacci retracement is actually what it is telling it about, that how much the price will retrace and will go back to follow its original trend. So here, if it crosses above this, it actually means that the price is not retracing; it is changing its direction only by itself, right?
Clear.
It's
Thank
like,
you.
okay,
And Ganesh, Fibonacci is not only for the pullbacks, right? We can also calculate targets based on this, correct? If we draw it reverse.
yes.
Okay.
But this demark method, how it does, because we are actually considering which is the closest reference point and drawing it from above, from the next means opposite side, it actually takes care of it. Otherwise, then you need to select extension. There is another indicator extension for that separately. So you don't need to go into that part. If you consider this, but follow this particular rule, it takes care of that. If you are thinking it is very complicated, we'll also be looking after the indicator that is automatically draws. So don't need to take that much tension. We'll just look into the settings aspect. So this particular indicator, the most commonly getting used are 0.786, 61, 0.38, 0.5. 0.5 is actually not part of fib, but it is used because of it is a midpoint, so it has its own significance in itself. So if you all know something, we'll say yes, 0.5 is not a fib value. Yes, it is not a fib value. It is has its own relevance because it is a midpoint. So if you could see the ratio that is getting constant. So you can select multiple of it, but most probably in intraday, 1 means 1.618 should suffice. Means I have just kept it for that much only. Then other than things are about this background. Next is the reverse part, which someone just asked about. So here is the reversal. It does that over here. Then price, if you want to see the price or no. If you want to see the levels or no. So what you want to see in terms of percentage or directly values. Then the labels where you want them. Most probably I like to keep it on right because there are no particular candlestick pattern or line chart over here. So this part is always clean. So that's all, and this is the coordinates for price. So I would suggest not to touch them because that we have already selected. I hope this is clear. If anybody has any question particular in the settings part, we can look into that.
The best way is, I think, I started practicing it using the drawing tool. And even though it may look a bit complicated, actually it is very easy. And about 1 hour of practice, you will get the hang of it. And then you will start remembering. See, this is very useful in determining whether it's a pullback, a retracement, or there's a change of trend. And that gives you a lot of further entry opportunities. Can you say which levels you think is very strong in terms of, I mean, the concept I'm trying to say is the higher the retracement level, let's say to 78%, so there's a very high chance of it pulling back, correct?
Yes,
Yeah.
78 and this 38. These
Yeah.
are the 2 points.
Yes. So it's very high chance that it will go back and follow the original trend after the retracement. Am I correct?
Yes, yes.
Okay. So these numbers, it won't take time. It's a question of practice. Fibonacci is followed by most institutional traders. So again, why we are saying this, again to the concept of area of confluence, that when other people are trading, you may not believe, you may not trade on that. When other people are trading, so when you are aware of that, then when your system, what you are trading, and there is a match between the other strategies they are using, definitely you are with the crowd, right? So your probability of your trade really increases. So that is the whole idea of Fibonacci. It is very widely used, though it is used in a larger time frame. Okay.
Okay, so next part is looking into the automatic one, the indicator which we talked about. So this is the auto fib retracement. It is available, and earlier it was not there. This is newly they are created a few years ago. The only problem why I took the manual first, it looks bit tough for first time, but this is what happens. It creates something of its own. Sometimes it's relevant, sometimes it's not relevant. So we have to actually adjust it. So this is the deviation and this is the depth. There are two parameters. What it means, it is the multiplier that affects how much the price should deviate from the previous pivot. And the depth is looking at the past, means minimum number of bars that should be taken into account in the past. I'd like to keep it as 5 and 15. It somewhat comes closer. Most commonly, I try to do it manually because the time it takes to adjust it to identify a particular lever, it is better to just go with something which we can draw it by itself. So this is the one thing which it takes time. It's not about because I'm daily time frame. Even if we go into the particular 1 hour also, it's same. So I would still suggest you to go with the manual part because you will take much time in actually adjusting it to get a particular level. And one thing is there is no reference point to move, so you can say it is drawing somewhere over here and it is creating somewhere differently altogether. So the relevance of this actually gets lost if you are actually not able to change the reference point. So that is the reason I would not refer it, but just I'm showing it. These two parameters are changeable and rest all things are same, so there is not much difference into it. Rest is all same. If you want, I can spend some time in adjusting it, but to just respect the time, I'm just keeping it, and I would like you to everyone research on this but I would still suggest you to go with the manual aspect. This is the second one, autofib retracement. No, we have just covered autofib retracement. Extension, yes. So this is the extension part. Just a second. So I'm just disabling extend left or extend right. So I don't want it to just clutter it. That's why. So here you could see one over is coming over here. So again, you have to adjust it to make sure your one is getting to the point over here, the closing price or the high price of the day. For this, you can just change the depth. So based on that, it creates itself. So there, I think so. It is still more like a more work needs to be done to make it more accurate from their side. But yes, if you think that the demarc is very tough, you can go for this. But I would still suggest to prefer manual, because in intraday or in time frames where like you cannot spend so much time in making changing into the parameters and moving into it to make sure it is perfect one. So that would like just creating high point, low point, and with continuity practice of time, you just create it in few minutes. Next is AVWAP. So AVWAP is a indicator which is commonly used for intraday. Sorry, VWAP is which is used getting intraday, and AVWAP, it is like a drawing tool. So it's available in the first one on your left side. No, sorry, second one. The last one, anchor VWAP. In anchored VWAP, similarly like VWAP, but it takes care at a higher time frame, daily, weekly. VWAP cannot be applied over there. So before we start, just wanted to tell you, it considers volume also in its account. So that's why it is very relevant to identify big players, because the support and resistance gets applied by this one is very long term. Means it will get followed in not like particular hours or minutes, like days and weeks and months. For this, you have to just select the indicator, select a point, and just click on it. If you double click on it, there is this bands available in this. I have just disabled to make sure to create a good visibility. So something it will look like this. This is the band of it, but I still prefer to just go with the VWAP part. So when I say why it is relevant, you can see I have just drawn one line over here also. This is the point drawn from the high point. This is the second high point, and it is respected. So this particular day is 5th of April. Here it is 29th April, and again over here it is 3rd of June. So last 3 months it is still respecting the levels created by it. So if you want to see how what the big players are looking as their support and resistance, I would prefer this one will never means give you wrong info. Just deleting this one. Okay, so there is one thing, a VWAP when it gets loses its relevance. So here you can see I have drawn the particular VWAP. It is actually acting as a good resistance, but after this price is actually crossing over here, so that is why it loses its relevance. So the best thing is people tend to draw it in continuous phase, and they tend to delete the ones which are getting breached or non-conclusive, we can say like that also. So this one has lost its importance, so we'll be just deleting it. So just select high points, low points. Okay, if you came across things like, yes, these 2 points are same, which you want to select? Select the previous point because it has more volume. So these are the most closest ones which I have taken. So in this case, this one is actually cross below, prices cross below this, so we'll be deleting this one. If you are saying yes, this has crossed over here, should we delete this? No, it is just a testing phase. Price have actually came below this, but over here the price has gone below this, so yes, now you have to delete it. So this is our current support and resistance for Nifty. 16,350 range and 15,700. So you can say, you can refer current ones. You have to practice this, and you have to take care, you have to actually draw it from all the major support and resistance to get a gauge of which one are active, which one are not active, because these tend to get followed for like 6 months or so. So they are like very good ones.
One thing, we are trading mostly on weekly options, right? Okay, so now let's focus on the weekly options. So, can you explain the three methods, doing it on the first day of the week or the month or the power candle see, what I'm trying to say is, if you take, let's say on a Friday, there is a big candle, instead of doing it I'm just trying to explain the logic. Instead of trying to do it on the first day of the month or first day, Friday morning, first candle, if you draw it also, there is an option to draw it on the big candle during the day. Why? Because that is where most buyers and sellers are there, right? Most activity. That is the point which will make sense also. That is, I'm explaining the third option, not exactly on the first day or the first day, also on the biggest candle where there is a lot of action. So that is what the anchoring is. You are anchoring to a particular point or in time, right? So can you say something about those options where you can anchor exactly pros and cons?
Okay, so for anchoring, the people who are actually getting into options part, so there are monthly options, weekly options. In case of that, I would suggest you to start with, for monthly, start it with the start of the expiry. Like if the expiry is on 28th or 29th, you can select 28-29 because there is a rollover data in that, and you can select that as anchor point, and you can proceed to that. So it is okay if it is not the high point. Similarly for weekly, start with the Thursday of that and just proceed ahead. So here I have chosen as 1 hour chart. So you can actually select a 1 hour, because I refer 1 hour for the weekly. I don't do monthly, but yes, for weekly you can refer 1 hour. You can create your anchor points, and you can just create strangles, straddles. So now here currently it is a good point to create our strangles. Means something you can sell above this particular 16,500 or something below 15,700. It should support you. Good. But there is one more thing, you need to take the options data into consideration. So please don't just follow this. You need to select which option has good amount of, means the perfect combination of delta neutral strategy or delta gamma neutral strategy, or the theta should be in your favor, like that. Just cannot select any strike price and just get into it. So that needs to taken into consideration. But for support and resistance perspective, yes, you can follow this one perfectly. If you want, I can change it into candlestick to see how it looks like normally. Any questions in this? Okay, no questions.
Guys, if there is anything you don't understand, this is the time to ask. Because when we ask in the group, in writing, this is the most effective. Either it is very clear to you or nothing is clear to you, I do not know. So, okay. Yeah.
Can you please explain again the upper anchored VWAP? What was the setting that you have done?
Okay, yes, sure. So Actually, there is no setting. You have to just select the high point. Because I'm going into line chart, it does not make any difference. I'm just selecting line chart to avoid any confusion that in your mind that yes, this should be the high point. No, this should be the high point. Because in line chart, the high point or any point has its own significance because it directly gets depicted. So just select the high point and the low point.
What is the indicator we have to use to select that? I'm sorry if I'm being
Yeah,
silly.
sure, no problem. So in your drawing tool, second option, in the second option, last option, it is named as anchored VWAP.
Oh, okay. Got it. Thank you.
Ganesh, I have one doubt regarding, not doubt, I just want to clarify one thing. Regarding option, start
Hmm.
of the expiry is your default pivot point, right? Anchor pivot.
Yeah, I did not get means like you're saying start of the pivot means anchor point.
Sorry. Start of the expiry. Let's say you said for weekly, Thursday will be your default pivot anchor, right?
No,
Yeah,
no,
that's
no, sorry, no. When you put auto option, it will be the start of the day like the VWAP. VWAP is starting every day, right? And it
Yes.
ends. So when you put auto options, it will start and it will just match. Very simple. What you do, you take the VWAP option, the normal VWAP. In indicator also you have it. Can you show it, Ganesh? You open the indicator and you put auto, then you will get a built-in, right? Are you
yes,
getting it? Yeah, okay.
yes,
It will show only the daily. Now, the question is, if you leave the auto view app without actually anchoring it on weekly or big candle or monthly, it will be like a regular view app. It will start on the day, beginning of the day, it will end on the day, right? It is calculating the daily volume. So, unadjusted default setting is similar to VWAP. But as Ganesh explained, there are different ways to anchor it. Am I correct, Ganesh? Yeah.
yes, totally, 100%.
Does it answer your question, Girish?
Yes, sir.
Yeah.
Yes, very much. Thank you
Clear.
very much.
So
I'm
what you need to do, either you can take it from the drawing tool or you can take this auto and then in the settings, can you just go and show in the indicator settings how you can change actually practically?
Yes, just a
Put
second.
the anchoring change.
Huh. Okay, this is like just a second.
You explained well, Ganesh. What I'm saying is just, yeah, okay, thank you. Got it.
Yes, so in anchored VWAP there is this bands like our regular VWAP. The difference is just related to the auto points. It does not start at the day or end at the day. It actually considers the point which you want to select it as a reference point. So the guidelines to select a reference point would be the high point or the low point. In case of expiries, you should select the start point of the expiry because there is tends to happen like no, not everybody indulges in the on Friday because the expiry starts on Friday. They tend to start on Thursday also for next day expiry. So that's why I would suggest to select Thursday also in your uh, selection of anchor point. So that is just guidelines. It is not like a hard and fast rule.
No, you mean the Thursday closing candle, right?
Yes,
Yes,
Thursday
correct.
closing candle.
That's correct. Some people take at 3:20 also because there may be some closing disruptions because people want to close their trades. I do it at 3:20, right? But that is not, I mean, everybody has their own assumptions and style. Why I take 3:20 instead of 3:29 is because this last 10 minutes, there will be people do not on the basis of trend, they just want to close their positions. And there's also MIS orders are closed automatically. So,
That's right.
but anyway, it's a question of debate. Nothing is proven that this is better or that is better.
Okay. Yes,
Okay.
that is. Okay, so any other questions on AVWAP? Okay,
I think no questions. You
okay,
can
so good to go. So this is the last section. So we'll be covering the pivot boss. So this pivot boss is actually not a name of an individual. It's more like a psychological aspect which the person Frank Ochava uses. I would prefer you to read his book. His book is really very good, and it is like a must read for any beginner. He has covered a very well all the topics, and some of these topics are still relevant in the market. So yes, I would suggest you to read the book. The book name is also Pivot Boss.
Achovia is also is a developer of the CPR, right, Ganesh? Yeah,
Uh,
that talks a lot about the use of
hmm,
CPR strategy.
so we'll be covering that one also. There was one question I asked at the beginning, what is the relevance of the pivot point? So we'll be covering that today, means currently. So I'll be covering this particular pivot range and the CPR, then the developing pivot points, ADR and PEMA. Okay, so let's start with pivot first. So this guy has given all the things in one tool, so that's why we are actually referring it. So we'll first go through the settings. Don't take tension about the chart first. So I've selected 5 minute chart. So this is how it looks like.
Sorry, I have just one question.
Yes, please go ahead.
When you are plotting the Fibonacci retracement manually, will you select from wick to wick or candle to candle, body to body? I know you have shown it on the line chart, but I just wanted to check on the candle chart.
In case of candle chart, if you want to draw it in candle chart, I would suggest you to go with wick, because there is a trading happened on wick also. It's not like it's just there. Some trading has happened, so I would suggest you to select the wick also.
Thank you.
So I would means there this question comes into everybody's mind, like should I consider the wick or should I not consider the wick? Even drawing a simple horizontal or vertical line, trend lines, it comes. So that's why just go with the line chart and then draw it. Then you can come back into the bar chart or candlestick chart. That becomes very means confusion times, or there will no confusion in your mind. There are like second thought, should I selected that? Their things would have been look something differently. So those things would not come into picture.
Thank you.
But as a rule, wick must be taken. It's not a choice. The correct way of drawing is top of the wick or tail, because there has been an activity, right? Even though it didn't close. So
Yes.
that is
Sorry to
really
interrupt.
Yeah.
There's a question from Chandra Gowda. He's asking which there are many pivot bosses. Which
Yes.
one you
So
use?
author is Mukul. So this one he has really created nice way. MUKKULL. If you want, I can type the author's name. You can go through other indicators also, which he is having.
Yeah, I think this is a very good indicator. I also use this. And latest
Yes.
version released yesterday with the source code as well. Finish, I can share that.
Okay, I don't have the source code. You can ask the author if he wants to share it.
Sure.
So we just go into the settings, so you'll know what things are actually available. So he has given the pivot points, time frame, which you can refer to. Then he has provided Camarilla levels in this. So in Camarilla also he has provided you the option which one should be you want it to be visible. So from H1 to H6, everything's are available. Apart from this, he has also provided option for floor levels. Then next is CPR or the pivot range, central pivot range. Next is previous high low close. Just a second. So when you actually Over here you could see there was a previous low. So if you read his book, Franco Chavas, he with apart from this particular levels, he has also said there is a significant importance to the previous high low close. So that's why there is this option. Pivot points, this is a midpoint of the day. So high and low, average. So because we are at the end of the day, if you select it in the market during the moving market, this moving midpoint will actually be moving up or moving down or just remaining constant. Depends upon how the market profile is moving. Last one is the day range. So I don't actually means keep it always. So just for showing of it, I'm just showing you, because it creates too much of clutter. We don't want so much of information that you actually forgot that there are also candles in the chart. This one is actually very helpful, where you can just see today's pivot, or there are like multiple pivots. I think so. The tip pivot for today, that should actually suffice for intraday. Extend line, it will just create a vertical line. So here I kept it yes, because it is helpful to create a at till end of the day. If you select any regular pivot, like somebody asked, like there are multiple pivots, what they do, if we are at currently at 10 o'clock or 10:10, these lines will be till here only, they will not be here. So you cannot able to gauge how the day will look in a whole. If they are in the whole drawing till extended up till here, you can get that fair perfect idea about the day. Next is PEMA. So PEMA is actually your EMA, but in EMA what happens, there are multiple ways to draw EMA. When you select high, low, close, add it and create an average of it. So that way you create 8, 13 and 21. So this one is recommended by the pivot boss guy, Franco Chava. And for intraday, short term, this is this configuration. The next for mid values, it is 13, 21, 36, and for higher time frame it is 21, 36 and 55. So he has not provided that, I don't know why, but those 5 EMAs actually create the whole envelope for the whole PEMA. Moving average is 50 and 100, so we have disabled it. It just acts as a regular EMA, SMA. So source is close. VWAP, that is also available in this, you can draw it, but as you can see, if you draw it, it will lose its visibility because there are already too much things. One thing which I can tell you about is pivot table over this part. So in this over here, he has created this particular trend. So this is actually the trend which tells at what time frame how the price is looking at, basically referring to the H3 and L3. So as I said, once it crosses H3, or when you say S3 or R3, here he has referred H3 and H4 and L4 and L3. It still means the same. Concept does not get changed. Just cosmetic. That is a cosmetic aspect. If it is crossing the H3, it says market is trending. So that is what he has used it. So if it is above H3, it will show as green. In between them, it will be show as gray, and below it, it is referring to as downward moving. So you can see daily, weekly, monthly, it is all green. So we are saying market is up moving. Similarly for RSI, but in case of RSI, the reference point are 70 and 30. It is similar to what H3 and L3 it is. Okay, so there was one question about this particular significance of pivot. So this is the part where we'll cover it. So I'll just disable all of them first. So we'll look into how it should be look. Okay. Okay, it is taking some time. It usually does not take this much time, I can assure you that.
While it is getting loaded, let me just add a comment. See, when people have restrictions in training you in terms of the number of indicators you can do, if you have Pro Plus or lesser, So this is one good way of, this counts as one indicator. So you are getting, instead of using separate VWAP and this and averages, you use one indicator, but you get the benefit of 10 indicators or 5 indicators. So this is one way of saving, using the number of and clutter your chart, and also on restricting the use of indicators by TradingView. There are other indicators like 10 in 1 for moving averages, 10 in 1 for covering MACD and other things. So this is another advantage of using this type of, what you say, comprehensive indicators, which gives you many options. Similarly, it is available for indicators like MACD, RSI and all that. You just type 10 in 1, you will get 2, 3. Okay. Thank you, Ganesh.
Okay, so this is, I have just applied only one thing, CPR. So these are the basic pivot point, and this one is called as TC, this one is called as the BC. The calculations are available in the links which I have provided to you, so you can also go through that. And apart from this, the support and resistance which are getting created, so based on the different types, they are called as Camrilla, Woody, DM, traditional, classic. So I have just disabled the Camrilla ones, and now we are just seeing what it is called as the CPR. So this is very commonly used to identify how the next day will look like. A relation between the CPR will provide you that. So this last column, particular CPR, it talks about that. So when we say higher value, this particular relation is known as higher value. For this day, it is higher than the yesterday's day. Or you can say this one clearly defines it. This CPR value and this particular cipher range, you can say it is of higher range. So this is of higher value. Similarly, if it is a overlapped higher value, is between these two. So the pivot point is higher, but the range is getting overlapped to some extent. So we say that it is overlapped higher value. Similarly, for opposite one, this is your lower value, and okay, I need to. Okay, over here you can see it is overlapped to lower value. It is not 100, means not clearly defined, but I don't have any example to show you immediately. Okay, here you can see in this particular day, you can see this pivot points are lower than this. So this is your lower value. The one thing which is very important is about this one. This is your outside value. The pivot point are actually engulfing the previous day. It actually says the market is going to be sideways on this day because it is overlapping this. So basically the trend analysis, how the market is going to see, like particular over here, the CPR is very narrow. So it tells us that the market is going to be a range. So,
Ganesh, just zoom the chart, please.
Okay. So when I'm saying why this narrow CPR is going to be a trending and why this one is not being a trending day. So the reason is there is a compression because the market is actually being sideways for a good period of time. What happens? Your calculation will actually come to a stage where your CPR gets narrow. So this is our expansion. It is similar to the Bollinger Band. So outside value, I have just told you. Inside value is, I need to find the inside value. This is the inside value. Your today's CPR is actually getting covered into the previous day CPR. So it also tells a narrow range trading day. Means within the yesterday's defined range. Okay. So any doubts up till now? So just we have covered this whole thing.
Ganesh, we will, I don't think unless we have time now, because, yeah, how many slides you have more to present?
No, this is the last one. This is the last one.
Okay, then we will just take a question if it is there. Then we can move to the second presentation. Excellent presentation, Ganesh. You are really, I appreciate your depth of knowledge and practice. It's very useful. Things are new to many people. So we are presenting only that, familiarizing that these are there. This is in no way an in-depth analysis. As Ganesh suggested, you must read that Ochavia book. It's very good. It's one of the very basic fundamental book one should read. Okay, any questions?
Yeah, if any questions, please do.
Okay, no questions. So thank you very much, Ganesh. Do you have
Yeah.
any other presentation, or this is the one last slide?
Just these developing pivot points. I can cover it next time if you want. It's okay. Just I will tell in a bit 1 minute. So these are the pivot points, or these are the all the Camarilla levels. These are getting calculated based on this days, particular day, high, low, close. But in case of developing, what happens? It is using the current day. So if this is your high point and this is your low point at the start, so all the calculation will be based on this. So that's why the pivot points or these levels will get continually changed. So it becomes very useful for a sideways day or a trending day, because you get a level which is dynamic with the market or not with the static. So you will not able to stop. Yes, if the price is getting crossed over H5, you will not stop trading because the levels will also get changed. So that's why it becomes very helpful.
Can you show your indicator, Ganesh, so
Okay.
people know?
Okay, yes.
Maybe you will get more clients.
No, it's free indicator. It's already available.
So this is one developed by Ganesh himself, published, and I've also used tried to use it.
Okay, so this is pivot boss ADR levels. So in this everything is just same. Nothing is much changing.
When did you publish this, Ganesh?
Last month, I think.
Good.
Okay, in this also it is all same thing. Just I have created the PEMA 81321 3455. So based on your analysis, you can keep it short, mid-term, or long-term. Money zone levels, this is totally different concepts. Will not be touching into that. It is covered in chapter 3 of his book. So if you go through his book, you can actually get through that part. So we'll just cover the ones which is the related to the ADR values. So because this is not a static, currently it is looking at statics, I can select something. If Bitcoin is getting traded, no, Bitcoin is not getting traded. So you'll not get an idea of it, but I will just give a brief about it. So this actually indicator is based not on high, low, and close of previous day. This is based on ADR. So ADR stands for average daily range. So your daily range gets changed if your high and low is getting changed. So based on that, this ADR values, this indicator calculates new support and resistance on itself. So if a market is trending, okay, so first I will give you the reference point. So based on the ADR, it will calculate 25% ADR lines. Then there is 50%, 75%, 100, and 125% level. So usually market trends between 50, high and low. When it is into the trending, it will reach for 75, and usually it goes for 125. So if a market is getting into 125% range, it goes for a sideways movement after that. So here you can see it has actually reached 125%. But what happens, because this market is yesterday's market, like case of Friday, it was totally sideways. So you can see this 25% is actually at coinciding. So there are two lines, support and resistance of 25%. In case of trending day, you can see this 75% support is actually crossed above it is closer to the 125. Dotted lines depict high and low of the day. So this indicator is fairly simple. There is nothing much to do from your side. You just need to select the lines and the levels, and you just need to see it in the live market, because this is the closing of the day. We are looking at after the close, so it will not create much kind of a meaningful case in front of you right now. Just try to apply it in the live market, and you can view it. You will get more view on this, means how the indicators are creating new support and resistance, how it is moving. Okay, so can you please show the indicator? Which indicator I need to show? Shrenik chain. Both. Okay. So first one was pivot by Mukul. I have typed his name in the group, author name. Second one was from me. Pivot was ADR. In this author is G-iOS, so I will type that also. -iOS. Okay. Before that, we looked into Fibonacci. So those are not indicator. That is the drawing tool. You have to select the third drawing tool from the top in that first option. Second one, we did about AV web. So that is second option from the top. In that, you need to select the last option. Then we looked at auto tools of Fibonacci. So just type auto Fib. You will get both of them. In technicals, auto Fib extension, auto Fib retracement. These are inbuilt too. So there would be no author in this. So you can get easily that available. Okay, any other indicator I covered? Okay, because of time constraint, we didn't cover the developing part, but this is ADR is a developing type only. So you can look into that. This indicator is also inbuilt. So you just type pivot point standard. If you want, I can type in the name. Pivot point standard. So this indicator actually covers all the 6 types of different variations of the pivots. And then, okay, that's all. We covered all the indicators which I have discussed for today's. If you want anything specific which you didn't got, just type the name. I will provide you the snapshot of the indicator. Okay, that's all from my side. Thank you. Over to you, sir.
Thank you. Sorry. Nilesh just called me on the phone and he was seeing how to plan his presentation. Thank you, Ganesh. I mean, very detailed, and I'm sure we can we need to spend more time on these concepts, and you have explained it very well. And some requires a lot of practice. Actually, you play around with that drawing tools and try it, and slowly you will get it. And of course, the concepts are always there. There are videos in our own channel and other videos, and then we can also share and ask questions, right? This is only a starting point, as I said. By no means it's expected to be an exhaustive presentation. Fibonacci itself is a separate 1 semester course, 3 months course in universities. So we are trying to do what we are trying to do is just to give a glimpse of it. Ganesh, really thank you very much. You have done a very good, excellent presentation. Very appreciate. I'm sure you will get a lot of questions later on. So you can try to help depending on your time availability and whatever doubts. And when they actually practice and they try it, they may have new questions. Thank you, Ganesh. So let me invite Nilesh. Nilesh, are you ready?
Thank you, sir.
Yes, I'm ready.
Yes. So Nilesh, you can introduce and start your topic, please. Thanks.
Hello, everyone. My name is Nilesh, and I'm going to present the fifth part. Uh, Ganesh presented the four areas, and now I will be representing the fifth area, which is candlestick pattern. And I would like to tell you why chart patterns are useful to find area of confluence. So I'll be starting with the candlestick patterns first, and if time permits, we can go to chart patterns and other things. So let's start with candlestick patterns and candles first. Whenever you see a candle, let's take a look at the bullish candle first. So this is how a candle looks like, a bullish candle. And the lower shadow, this we usually call it as wick, and upper shadow also is called as wick. The point where it opens is called the low of a candle, and the point where it closes is called the high of the candle. And the body, it is called as the open, where you can see the body, and where the body closes is called the close of the candle. Similarly, just a tad bit opposite of this, uh, a bearish candle opens and it closes down, and here you can see the upper and lower shadows. I'll move to the there are many candlestick patterns, but we'll be focusing on reversals pattern mainly. These are the 10 patterns I'll be going to talk about today, and we'll talk about it in details. So this is the first pattern. I'm very sure most of you guys know it, but for the people who don't know it, this is known as a bullish engulfing pattern. Whenever you see this pattern with the area of confluence and the trend line supporting, you can see that this will be a reversal pattern, and this will give you a bullish trend when you see this pattern. This tells us about a trend reversal. This also tells us about that this pattern you will see at a downtrend. What this signifies is the sellers are losing their momentum, and then the bulls are taking the control, and bulls will start pushing the market up. This is what the bullish, and the opposite of this is when you see this pattern. This pattern is known as bearish engulfing. Whenever you see this pattern, this pattern will be at the uptrend. It will be at the top. So whenever you see this pattern, that along with the area of confluence, I'm not talking talking that the pattern you should trade on the patterns alone. You will have to see if there is an area of confluence around this pattern. Whenever you see this patterns around the area of confluence, there is a surety that this will act as an entry trigger, and you can take a trade. Now, bearish engulfing tells us that the uptrend is done, the buyers are losing momentum, and the sellers are taking control, and they will drive the price lower. Now, the third one I'm going to talk about is the hammer pattern. Now, this pattern, whenever you see a hammer, it could be of green color, it could be a red color candle, but both of them makes no sense. Like the color makes no difference in hammer and inverted hammer. Whenever you see this hammer at the bottom, it is called as bullish hammer. Both, you can see a green hammer or you can see a red hammer, but this will mean hammer. This will be at the bottom, it will be called as a hammer. And if you see this at the top of an uptrend, it will be called as a hanging man, both of them. Now, what this indicates is at the bottom of a downtrend, whenever you see this, a hammer, it will signify that, the sellers are losing momentum and the buyers will take control. The next candle will be your entry, and you could just enter, and it will be a reversal sign, a single one of this. It could be of any color. Similarly, this is called as inverted hammer. This is also known as whenever you see this inverted hammer at the end of a downtrend, whenever you see this, it will signify that the downtrend is done and there's a reversal happening along with area of confluence to support this. You can take a reversal trade and you can just get points. Now, this, whenever it is formed at the bottom of a downtrend, this will be called as a bullish inverted hammer. From here, the price will reverse, and you can take a bullish long trade. And whenever you see this pattern, at the top of a uptrend, this will signify a shooting star. It will be called as a shooting star. Basically, it is bearish inverted hammer, but they have multiple names for this. So this is called as shooting star. And whenever you see the shooting star at the top of the uptrend along with the area of confluence. This will tell us that there is a reversal and you can take a trade based on this. Now, let's talk about doji. What doji signifies is uncertainty in market. Whenever you see a doji, it will signify that there is uncertainty. Buyers and sellers both are
Sorry, Nilesh, it's not uncertainty, it's a indecisiveness.
indecisive. Yes, yes, indecisiveness. Whenever you see a doji, it indicates indecisiveness in the market. Long wicks indicates that there's a high volatility in market. Short wicks indicate that the market is trending, and this both the common doji and long led doji indicates that there is an indecision in the market. Now here the gravestone doji, this means that rejection of the higher prices. Uh, the sellers took the price lower, and this is how you get this. This is also a reversal pattern, indicating that higher prices are rejected. And this is dragonfly doji. What this indicates is the sellers are losing momentum. The sellers are pushing it, and this means rejection of the lower prices. I'll move to next. See, this is the this was a chart sent to me by Jagan sir. Now this here is a sign of bullish engulfing. Here, after this, the market reversed and gave a lot of points. And again, here, this is the latest example. Here, the market gave roughly about 600 to 800 points. Here, the pin bar as in the hammer is also called as pin bar. So here, the Nifty was at 15,400 and it went up to 16,275 and it's still going up. Now, let's talk about Morningstar. This is also a bullish reversal pattern. Whenever you see this,
Nilesh, sorry, this nifty thing you said, do you remember the dates? No, it is last 15,400, I think the last 10 days, right?
yes,
Yeah.
it's the last 10 days.
Yeah. So 15,400 to 16,275, right?
275. Yes,
so
sir.
that is the start of the rally, the reason.
Yes, sir.
Last 1 week rally. Okay, thank you. Yeah, good.
So the next pattern I'll be going to is it consists of 3 candlesticks. This is called as Morningstar candle, and this indicates a bullish reversal. Now, whenever you see this pattern, this means that the first red candle means the sellers are in control. Second, here there could be a doji, but this usually means indecision in the market. And then the bulls took control and they took the price higher. This is a reversal pattern and it's a very good pattern, strong pattern, and it indicates a upward movement at the later stage. Now, these
One more, Nilesh, you should always add that, sorry, just for clarity, you are doing very well, extremely well, that at this as value when it appears at the almost at the downtrend, right?
Yes, sir. This happens at the downtrend.
Downtrend.
And at the uptrend, you have evening star. Now, this pattern is also known as abandoned baby. There are multiple names given to multiple patterns. So this is also called as abandoned baby. There's also the reversal. This happens at the downtrend, the morning star pattern. And this the evening star patterns happens at the uptrend. So basically yin yang type of thing, like hammer, inverted hammer. So what evening star represents is the first candle, the green candle. It tells us that the buyers are in control. This indicates indecision in the market. And the third, the sellers took control and they took the market below. Obviously, you have to look at the area of confluence around this to support the trade you're taking. Then this is a 2 candlestick candle pattern. This is known as piercing line. This also indicates the same. The red one indicates that the buyers are in control. The sellers are in control. And the next one indicates that the buyers took control. Now here, what you have to look is at the 50% level of this red candle, the body of the next candle should cross the 50% of the previous candle, the red candle. This pattern at the bottom of the trend indicates that there is a reversal. also there has to be an area of confluence around this to take the bullish trade here, long trade. The reverse thing of this is dark cloud cover. Here, this is formed at the top of the uptrend. This indicates a reversal. This is similar to piercing candlestick pattern, but this is at the top of the uptrend. This is at the bottom of the downtrend. Similarly, the next candle, for example, the green one, the red one formed has to be above the 50, below the 50% of this body of the green candle here. Now we will look at blended candles. Like we had A plus B equal to C. Candles also, for example, suppose there's a candle you're looking at. This is the green candle is at 5-minute time frame. Sorry, at 15 minutes time frame, you see a green candle, and then the next candle you see at is a bearish candle. But whenever you see these candles at 30-minute time frame, higher time frames, you'll see that it gives an inverted hammer. This pattern, and what this does is at higher time frame, you get a clearer view of the market. It eliminates the noises, stronger signals. It summarizes the outcome of the several period of candle. This is what blending of candle does, and it gives you a solid pattern where you can take a trade on. Now, there are multiple examples of this. This is another example of this. What this does is, this is the bullish engulfing pattern. This gave us a hammer. The bearish engulf. These are just examples. This happens when you change time frames. For example, if you're looking at a 15-minute time frame and then you switch to 1-hour time frame, you'll find this pattern happening. And this is a 3 white soldier pattern. It turns into Marubozu bullish. 3 black crows turns into Marubozu bearish. Similarly, piercing bullish and turns into hammer, inverted hammer, and shooting star. But this to see the blending of candles, you have to change the time frames. You have to look at higher time frames.
1 minute, Nilesh.
Yes,
I
sir.
just want to add this reference to Aravind Ilango's presentation. He covered this blending concept. In fact, I was looking for the word. You remember? We were
Yes, sir.
talking.
Yes, sir.
You got the word now. So, if there is another perspective to this, which was explained very well by Aravind Ilango. He is there now in the meeting, I think. Yeah. So maybe he will have some tough questions for you, Nilesh. Okay.
Yes,
But the point I'm trying to say is, you have to see the Nilesh presentation in conjunction with the Arvind presentation. It is in YouTube. So you will get, and basically we are recording all these things. I mean, you have to read more and look at the charts every day, identifying. I think, Nilesh, you're going to also show us later that how to find this automatically in TradingView, correct?
Yes, sir. Yes, sir.
Okay, thank you. Go ahead.
So the next thing we are going to look at is chart patterns. Now you can see these are the chart patterns: double top, head and shoulder, rising wedge, double bottom. You can see these chart patterns are used by a lot of people, and these are very important. Now we'll be looking at reversal chart patterns. These are double top, double bottom, triple top, triple bottom, head and shoulder, inverse head and shoulder, cup and handle, ascending, descending triangles, rising, falling wedge, flag, and pennants. Now first we'll go with double top formation. This indicates that the sellers tried to take the buyers tried to take the price higher, but they couldn't, and then the sellers took the price away from them, and they dragged the price lower. This is what this pattern indicates. Now, whenever you see this happening, you will see there's a neckline, and there will be there will be a resistance here. The buyers couldn't take the price higher. They tried 2 times, but then they got exhausted, and then the sellers took momentum at this point. Here you could also see a retest. For example, it could go down and then again touch the neckline, and then it will give a stronger reversal signal. Here you can take entry. If you see a retesting, you can go, you can increase the target. This means a bearish technical reversal pattern, and the opposite of this is called as double bottom. This pattern is also called as M-shaped pattern because it looks like a M. you can use this in Bollinger Band also. What happens is whenever you use this in Bollinger Band, you'll see with 20 period moving average, simple moving average, you can see when there will be a band walking happening, and then the price will come down to the mean or lower, and then it will again try to hit the third standard deviation, but it won't, because here there will be a top, and then the price will keep on going down, and here it will start doing band walking again. Now the opposite of this is called as double bottom or a W pattern. This is similar to double top, but this indicates a bearish, bullish trend reversal. What happens is the sellers try to take the market lower, then the bulls try to take it up. Again, the sellers try to take it lower, but here they face resistance. Two times, if you're forcing, and but you couldn't go, then the sellers will take control and the sellers will take it higher. Sorry, the buyers will take it higher. Here you can see retest is happening. So here this will be you can use this area as the target. For example, the range of this area from the lower point to the resistance line, you can use this as a target, and this indicates a bullish trend reversal. Next is triple top, similar thing, but here the buyers are trying to hit it like 3 times. Imagine hitting 3 times the same level. They'll get exhausted and they will just give up. Here, when the buyers give up, this will be a neckline, and after that you could take a trade here, and this also is a reversal pattern. This will give you a triple. Sorry, this is a confirmation that the sellers have taken control and they will take the price lower. Similar to that, we have triple bottom. This is a bullish reversal signal. Here there is a neckline. You can see there's the first low, second low, third low. They couldn't take it lower. Then the bulls took control, and then the bulls went up, taking the price higher. Here it retested, and see, I mentioned about the target. This range will again be your target here. If you take an entry here, or if you take an entry here. The next thing, this is a variation of double top and triple top and triple bottom patterns, head and shoulder pattern. This indicates reversal. Both of them indicate reversal. So this is the pattern. Here you can see there's not a single peak here, but multiple peaks. So this is how head and shoulder looks like. There, the left shoulder and right shoulder could be different could be of different heights, because we don't get textbook explanation, textbook thing on the charts every day. So this will be a head. The top will be a head. This will be a left shoulder, and this will be a right shoulder. And whenever you see this pattern, and if there is a confluence of, if there is an area of confluence, this is a definite trade. You can trade based on these patterns, and you can just take a reversal trade. For example, here you can take a sell trade, and you'll get a lot of profit. Similarly, this is inverse head and shoulder. It's just the reverse of it. So here you can see the neckline. See here, the neckline has just crossed a bit. So this indicates after this, there will be this is a bullish reversal signal, and this head and shoulder is a bearish, and inverse is a bullish reversal signal. The next pattern is cup and handle. You will find this happening frequently over the price action on the chart. This is U-shaped, and you will have a handle. For example, here, what happens is the price tries to imitate the cup, and from here this will give you a breakout. The continuation of trend will happen here. This point, the first point and the second point, will act as a resistance. This will form a cup, and there will be a handle. The handle here, this is our entry point. The end of the handle will be our entry point. From here you can take a breakout trade, and this is a bullish, it will go up. Now next we are looking at flags and pennants. Flags, this is a flag. This is a bullish flag. This is a bearish flag, and this is what happens when you see these patterns. Is these are the small pauses in the market. For example, there's a huge uptrend, then there's a phase of consolidation happening. So this is the consolidation phase here and here, where you can see this happening in Bollinger Band also. We call it a squeeze. So during the squeeze period, this is what happens. And if you apply the patterns, you'll see that during the squeeze, you will see either the bullish, bearish, or the pennants happening. What happens is like squeeze, there's a breakout after squeeze. Here also, this will also indicate a breakout. So these are flags. This is a bull flag. This is a bear flag. This happens on a downtrend. This is a bullish pennant, and this is a bearish pennant. Now we'll come to wedges. What are wedges? Wedges are two trend lines that converge. For example, here you draw a trend line, and here there's a low trend line of a lower. There's a lower low happening, and there's higher high happening. You draw two trend lines, and this will give you a wedge. Similarly, this is a rising wedge, and this is a falling wedge. What happens is, in a rising wedge, the trend lines are going higher. From here, the price could go up or go down. But this what happens is higher lows, right? Yes, higher lows. Yeah. So these are the trend lines. If the trend lines go up, this indicates a rising wedge. The price could either go up or could go down. For example, here the price is going down, but here I'll show you one more example. Yeah. Here the price went down. Here this is a example. One. This pattern, the first one, there's a reversal of this here happening. For example, the price went up. So with wedges, the price could either go up or could go down. But this indicates a rising wedge, and this is a falling wedge. Similar to that, this indicates reversal or continuation of patterns. Both the wedges. Any questions, or should I move to other one? Hello, am I audible?
Nilesh, you're fine. Let's go. And just a small announcement. We will be extending by a few minutes so that Nilesh can complete the topic. He has done a lot of good work, and these images are really fantastic. They really explain. I'm sure you searched well and got those things. Because you want to show it in the trading, you will extend it by a few minutes. People who want to leave or other commitments can leave because it will be available in the recording anyway tomorrow. Proceed.
Yeah. So what happens is this upper trend will act as a resistance, and this will act as a support. The trend lines which are drawn, and from there it could either go up or the price action could go down. Either a breakout or a reversal could happen. Now I'll be moving to triangle patterns. Now these are the triangle patterns, and these are similar to what pennants are. Like if you see, this is triangle, and I'll show you pennants. See, these are pennants. You'll be like, what is the difference between pennant and pennant and triangles? What happens is pennants. Whenever you see pennants, these are short term. Whenever you come across a pennant, this will be a very short term thing happening in the market. After a trend, there is a exhaustion, and they take a pause, and after that there is a breakout. But triangles, you can see this happening at a larger time frame. Now there are types of triangles: ascending, which indicates upside breakout; descending triangle, which indicates a breakout in the downside; and then there's a symmetrical triangles. This symmetrical indicates a breakout on. It could give a breakout on either side, like upward or even below. Now the next thing I'll do is I'll move to the chart. Okay. Just 1 minute.
Nilesh, you don't need to rush. You have the time.
Yes, sir. Yes, sir.
Whatever you have prepared very well. So please let's finish it in a proper way.
So what I'm doing here is I'll show you chart patterns and also the candlestick patterns. See here, this is called this is hammer. I'm showing it on the 3-minute time frame, but please upload the presentation along with the video. I will post the presentation in the group. Now, here you can see a hammer pattern, and here the pivot points are supporting it, which is an area of confluence. And here, from here, it went up. This is a reversal signal. Even here, there's a hammer happening, and also there's a shooting star. And from there, it went down.
Nilesh,
Yes, sir. Yeah.
this is Arvind here.
Yeah, go on, Arvind.
Go right, brother. There is a beautiful blend candle. Go on right side.
Where here?
At 14:30. Yeah, if you blend these three candles, yeah, that 14 left, more left, more left.
Here,
Yeah.
this one.
More left, brother.
Here.
Ah.
Yeah, 3 candles, right?
If you blend these three candles, you'll get a clear hammer candle.
Yeah. But the thing is, I am on a 3-minute time frame, and if I wanted to blend, I could just, I'll have to use a 5-minute. Let's see. What? Okay. I think this is what you meant, right?
Yeah.
Yeah. See, this is a. Yeah, even here we got a hammer, which indicates that there's a reversal. Plus, there's a area of confluence here, the pivot point. You can see. Here you see a morning star pattern. Also,
No, Nilesh, what you look
Yes, sir.
at the time frame, particular time quickly, if possible. Otherwise, we will not do it. On that
Sir, your voice
point,
is
what
breaking.
Arvind is saying is
Hello.
you go to 15 minutes time frame and see how the pattern. This
Sir,
what
your voice is not clear.
okay. So okay, leave it. We will do it another time because there's no time. Yeah.
Sir, can you come again?
I said
Can
we'll
you-
leave it here because there's no time, much time. So you will finish. What I thought Arvind is saying, which is that can be shown, that blending aspect by just moving to a 15 minutes time frame. This
Yes,
kind
sir, yes, sir.
you already showed once. Just taking another example. That's all.
Yeah.
So why I said this because sometimes we don't get a clear candle, like exact what we are studying in books. That's what I said.
Yeah, we never get it, but here I've tried to find. See, this is a bullish engulfing, and it gave a breakout. Now, what I'll do is I'll show you patterns, the chart patterns, which just give me a minute. I don't know why my computer is not working properly. Okay, so we'll look at chart patterns here. First, we'll look at double top. This is very rare to happen, but yeah, we'll see here. Just there's some technical glitch. I can't change the tabs for some reason. Just give me 1 minute. I can't open my tab for some reason. So here, this is a head and shoulder pattern. But instead of giving a bullish breakout, there was a resistance level here, and which is why it didn't move up. So this is one pattern. I'll just turn on all the patterns. See, these are the indicators. These are inbuilt indicators you can find on here. You can just go and type the patterns. For example, double top. If you type this, you will just find a double top, double bottom patterns. They will just appear on the screen like here. I've shown the head and shoulder pattern. See, it appeared. It will show the left shoulder, the right shoulder. This is the neckline, the green one. This is the neckline. Here I wanted to show you one more pattern. This is the cup and handle pattern. So I'll just close the rising. Yeah, this is the cup and handle pattern. Can you see the price going down and then going up? And here again, it goes down, it consolidates in this area, and then this point will be a here. This point will be our entry. We'll take a bullish trade here, a long trade, and then this will be a we can go up and up. This the cup and handle pattern is you'll find it every day probably, but this occurs frequently in the market. Now this is the evening star pattern. Here this moving average also gave us the area of confluence, and here we could have taken a trade and this would have rewarded heavily. This was on 5th June. Now here again a head and shoulder pattern, and we have a double top pattern here. Wait, let me just. Here we have a double top. Now, the one thing you should look at is the volume. Now, the volume here at the first top is higher than the volume at the second top. And from here, this will be a neckline. And here it retested and then it gave a breakout, but it was a false breakout. This pattern indicator show patterns on any time frame. Yes, it does on any time frame. Usually the higher time frame, this thing works best. You can go with 3 minutes to 5 minutes and higher, like people use it on a daily chart. Again, a head and shoulder pattern. Now we'll look at wedges. See, these are the wedges. Here, it gives a higher highs, two trend lines converging. So this is the first trend line, this is the second trend line, and here it gave a signal, it gave a breakout here, this point, 1251. But it was a short-lived breakout. This is also probably supporting. Yeah. Any questions, please, sir?
You explained very well, the indicators you chose. I mean, Friday, this is a Friday wedge, is it? No. Can you come to Friday last?
Yes, sir.
Just one small example. Can you put this falling? Yeah, that is the one, falling wedge.
Falling
right?
wedge. Yes,
but
sir.
then times break does make a difference. I will show it to you. Because this, as Arvind pointed out, these patterns also change. I will show you. Just go to 1 minute on Friday. With that, we will close this discussion. Then put this, where is the W pattern is there?
Yes, sir.
Yeah. You
W
see
pattern.
that. But you will not see that in 3 minutes. So
Yes,
when
sir.
you change it to, note it down, stay on this W pattern. Now change it to 3 minutes, that will disappear.
So 1 minute, it's at 12:31 and it ends at
No,
13.
you go to the 3 minutes time frame, you will not see the W pattern, correct?
Yes, sir. Yes, sir.
Yeah, it disappeared. So this is another thing people see. These are all very indicative, and it comes with experience, and adding to the confluence. But as Nilesh said, that is why we use confluence, meaning to be sure to increase the probability that your trade is successful, right? So that we have to understand higher time frames, the picture could be different. Thank you. Yeah, no questions, Nilesh. Yeah. You want to show where to just before you close, if you don't have anything, can you show in the indicator how you search for this particular thing?
Yes, sir. Yes, sir.
Yeah.
These are inbuilt indicators. For example, I'm just removing this. I'll add it again. You can go to indicators and you can type inverse head and shoulder here, and you can just add it. It will show up. See, it showed here.
Similarly, you have something for candlestick also, right? Yeah.
Yes, yes, sir.
Yeah. For if you want to show, just can you show? Yeah, you can remove this or take a new day, so that it's clear any day.
So 1 minute, I'll show it in this only. I've marked some examples. For example, this yellow circles you can see
Just one example how to search.
here, sir. Sir, there are. I have drawn this. I will. You can use this. This one. Remove some. You can add candlestick patterns from here. All candlestick patterns. It's also inbuilt. So here it will show up the patterns and reversal. For example, here there's a hammer. It went up. It showed hammer H. Hammer. Then here there's a doji. Again here there's a doji. This is bullish engulfing. Again engulfing. Here there's a doji. This
Nilesh, we can stop here
okay,
because
sir.
it's basically we want to tell people how to look for it,
Yes,
because they can try this, play around with this, and how to find it automated. You don't need to, of course, over repeat it. If you have a doubt, what is a bullish or any morning star, you type a morning star, then it will show you on that particular day. Then you get a more clarity when you read charts, right?
Prashant, you're right. Breakout can be on either side. It doesn't have to be on one side. This happens with wedge. This happens with flags, and this also will happen with pennants. There could be a breakout on either side. Any more questions?
Okay, Nilesh, I think we should close here, 9:45 already. So, is there anything else you want to say before we close?
No, sir. Thank you. That's about it. Anyone has any questions?
Okay, thank you very much. If there's a question, you can write to Nilesh directly or post it in the group. I'm sure he will be glad to answer it.
I'll be posting this presentation in the group. So
yeah, very important.
As a reference.
Because, yeah, this is a very good collection of what is relevant candlesticks, which is used for breakout and reversals. So, Nilesh, very good work, super work, superb, and the images were very good images you collected, and the way you have shown. Similarly, thanks to Ganesh also, very exhaustive original presentation. So many people have written, few people at least, that things are very new to them. Some are new to me as well. I've used Ganesh indicator. Of course, still just 2 days. Let me see how it goes. So thank you, Ganesh, and thank you, Nilesh, and thank you, audience, for people who stayed patiently for this extra timings. Good night.
Thank you, sir.
Thank you.